For a long time, investors have had to do just one thing in order to succeed: buy America. The US market is a powerful magnet for global capital, as well as companies that want to tap that capital. But right after Liberation Day tariffs in April 2025, some market watchers began talking about a new theme: sell America. There may be something to it. Since the start of 2025, US stocks have been outpaced by stocks in Europe, Japan, and even China. On top of that, the US dollar has declined by about 11% against major currencies. I recently wrote about how markets might perform in the year of the fire horse, with a subhead to a section that read, "Sell America, buy China." My general point was that diversifying from the US market makes sense, and that China is an increasingly interesting market. US stocks account for nearly 63% of the MSCI All-Country World Index. China accounts for only 3%. Yet China is the second largest economy in the world. It's a global force in manufacturing, making big strides in advanced technologies like AI. Back in January 2025, China's DeepSeek caused a temporary sell-off in some major US tech stocks when it unveiled a high-performing AI model that it had produced cheaply and without using the most advanced chips. Still, China has risks. Only a few years ago, some market watchers were saying that China was uninvestable because of its regulatory crackdowns and floundering real estate sector. But China's economy is growing and throwing up lots of companies that need capital. Some analysts think China stocks now look relatively attractive. Why is Sell America emerging now? The US has run a trade deficit for a very long time. A good part of the trade surpluses generated by the rest of the world is channeled back into US stocks and bonds. Even after all the tariffs Trump imposed in 2025, the US still ended up with a trade deficit of more than $900 billion for the year. Data from the US Treasury also shows that overseas investors were net buyers of $1.6 trillion worth of long-term US financial assets in 2025. Meanwhile, China managed to expand its total exports last year, and it ended up with a record trade surplus of $1.2 trillion. The Sell America narrative is a reflection of the nervousness in the market that the current US administration might go too far in trying to quickly address the trade deficit, and that it may cause some kind of economic or financial market crisis. But a lot really depends on what happens next. The US courts have struck down a broad swathe of Trump's tariffs, but the US president is adding new tariffs based on different laws. So it looks like US trade policy uncertainty isn't going away. In Asia, there seems to be a realization that having a vibrant domestic stock market is an economic advantage. Singapore is also implementing a slew of measures to revitalize its own market. So for now, it does appear that global investors may look favorably on this region.